Okay, so welcome to this session, and thank you, Ila, the International Luxury Hotel Association, to invite our panelists for this session. The session is how owners and asset manager work together. So I will start by present you our panelists, and then I will ask them some questions, and they will be free to answer. So, welcome, Gillian. Gillian Anthony. He's based in London, so hello, London. He has almost 30 years of experience in the hospitality industry. He's head of the investment and asset management at Dorchester Group, owner of 9 luxury hotels in USA and Europe. Julian has an extensive finance and asset management expertise in Asia with main luxury brands, and he's a chartered accountant and an active member of HAMA, the Hotel Asset Manager Association. Luc, could you wave your hand like that people will recognize you? Sorry, Julian, I didn't ask you, but Julian just raised as well, Tian. Luc Bosman, Belgium national, is a managing director hospitality at Tristan Capital Partner. TCP is a real estate investor who currently has 12 million of assets. The fund is relatively new in investing in hotel. However, Luc has a lot of experience in the hotel industry. He was the director of Attacher Capital, in charge of the asset management of hotel, where he was managing 12 luxury hotel and upscale hotel located in main gateway of Europe. Luc has an MBA. He's as well an EHL alumni and an active member of the Hotel Asset Manager Association. Vincenzo, could you wave your hand?
Good afternoon.
Hello, Vincenzo. Vincenzo is the Occupinti. Sorry, I'm not Italian. Okay, Vincenzo Occupinti. Vincenzo is the investment manager of a company that he co-created, Archer Hotel Capital. It's a new hotel investment vehicle backed by 2 major investors, APG and GIC. He's responsible for the asset of 6 hotels located in major European city. And previously, he had asset management role at Host Hotel and Resort and some finance role with Marriott. Vincenzo has an MBA from IE Business School. Simon, could you wave your hand? Hey, hi, Simon. Everyone knows Simon. I mean, he's founder and chairman of Hoftel, a leading association of hospitality real estate investor, founder as well of the Gulf and Indian and Southeast India Hotel Investor Summit. So you will meet him in a lot of events where hotel investors are. Previously, he was Chief Financial Officer for Six Sense and VP at JP Morgan. And Simon holds an MBA from Oxford. And myself, I'm teaching the hotel asset management at École Hôtelière de Lausanne, and I have an MBA from Cornell ESSEC IMI, and I'm as well an active member of HAMA. So thank you, Simon, Julian, Luc, and Vincenzo to be with us. And so I will ask Julian the first question. Julian, during COVID period, it was quite challenging for asset manager. The goal of most asset manager was to reduce fixed costs, monitor very closely cash flow. What are the owner's expectation in regard to managing an increased cost base for luxury hotel post-COVID? Is there any as well innovation that you will see coming in?
Okay, thank you. So for us, while fixed cost reduction was a priority, we also wanted to hold on to our people as much as possible. So with strong owner support and government assistance in many of our jurisdictions, especially in Europe, we managed to ride out the crisis whilst preparing for recovery. But yes, you're right, monitoring cash flow and sourcing the funding necessary to sustain our requirements over that period was a key focus of ours as asset managers. Um, Even prior to the onset of the pandemic, luxury hotels were already facing margin compression due to weak rate growth, while continuing to be weighed down by heavy labor and other associated costs necessary to maintain standards as a luxury product. With the easing of COVID restrictions, the industry is faced with a reduced labor pool, just as demand is returning, which places even further cost pressure on luxury hotels. This is only made worse by a stricter cleaning regime as a result of the pandemic. In addition to inflationary pressures we're now seeing in operating supplies, as a result of the supply chain issues we are seeing of late. All these pressures will erode margins even further, and operators need to find innovative ways to limit the compression of margins. From an owner's perspective, there is obviously an expectation to see some of these cost increases being mitigated without impacting the guest experience. Business as usual is not an option, as it's unlikely that the cost increases can be passed on fully in the form of rate increases. As far as innovation is concerned, particularly front of house innovation in the hospitality industry, this has largely been driven by the select serve sector, especially in the front of house area, and the acceptance by its clientele, is probably why it's successful over there. So things like keyless check-in, front office, front desk kiosks, automated F&B systems, have been trending. However, the typical luxury guest is not so accepting of these automated service options. Though post-COVID, maybe some luxury guests may prefer less human interaction. So there might be an opportunity to offer some of these solutions in parallel with the full service option. Where I see the bigger opportunity is in trying to rationalize our labor costs. Luxury hotels have tended to hold on to heavy management organization structures. With the loss of staff to other industries, luxury hotels need to take a harder look at their operating manning structures, I think. A flatter management structure with well-trained, empowered line staff should assist to keep overall payroll cost lower, while at the same time allowing for line staff to be paid at higher rates and to incentivize them to provide excellent service. So this is where I see the bigger opportunity for luxury. The other area where innovation and automation can be implemented without impacting the guest experience, in my view, is the back office operation. Luxury hotels have been very slow to adopt change here. And to this day, you have hotels that are churning out reams of paper daily with fully staffed offices occupying prime real estate. There are now numerous software solutions incorporating AI that can help to streamline and support lean back office operations in a complex and outsourced environments. I suppose owners also can assist here through CapEx deployment to drive some operational cost savings while promoting sustainability, whether it's through in-room automation or investing in latest BMS technology. This will help to ensure that our older iconic buildings are upgraded to become more sustainable and deliver some operational cost savings along the way. Finally, I'd say collaborating with the operator to identify underutilized space, investing in CapEx to find incremental sources of revenue is probably one other area where owners can help with margin decline.
Thank you, Julian. So if I understand, you see inflationary pressure, need for rational labor costs, and flattens the hierarchy in luxury segment, pay increase. You are recorded,
I think it's inevitable.
And a change, and it's quite interesting because you were talking about change with artificial intelligence in the back of office of hotel. Vincenzo, on your part, what are our owners' expectations are changing? And do you expect asset manager to be more granular? And do operator look the management of the operation differently post-COVID?
Yeah, thanks for your question. I think that my answer will connect in many points with what Julian says, because we cannot really come back to what we were before, and we have to change the way we operate, and also we have to change the way we respond to our owners and to their expectation. And if it's true that owner expectation have been constantly evolving during each stage of the pandemic, it's also true that they have a constant focus on risk assessment and cash flow mitigation, and that's for sure. And if it's true that forecasting has become even more difficult, even for the shorter term, but I think that planning has become instead even more important than ever. And in my experience during the last 2 years, the approach that's been proved very successful has been to stop and try to think what would be the main possible scenarios that it's ahead of us, and try to prepare sort of an action plan for each of these possible outcomes. And the result is that having a plan ready has allowed the team on the ground to really react quickly on the changes and just on the run on the operating model of the hotel. And this gave a competitive advantage at the single hotel compared to the concept that was a bit late in understanding and reacting on what was happening in the market. But to be able to do this, as you mentioned, you really have to change your approach and to become very granular. So you have to spend a lot of time on performing continuous analysis on the business model, on the P&L as well, and also to challenge what are the definition of some fixed cost. What is a real fixed cost, and what you can change the way you operate to sometimes, as Julian said, just to take it out from the equation altogether, just because you are doing some stuff over and over again, when the innovation could just bring you a lot of efficiency, especially in the back of house and not only in the operation. But also try to push back on some of the variable cost, just to try a different way of doing it, and understand is what you are offering is really what the customers at the end is the model customer is looking for, right? And then when you put together all this action, your objective should be to lower as much as possible the break-even point of the hotel. I think that what has been our main focus during the past 2 years. And we are talking about responses to the pandemic, but also believe that many of the changes that we have been implemented as a response will be here to stay, actually. And ultimately, this is also one of the owner expectation and ambition, right? To use this crisis as much as possible as a moment of reflection, a moment to look inward, and to reevaluate the way the hotels have been operating, right? So with the objective of becoming more flexible, more adaptable to this VUCA environment everyone lives in. And the second part of your question was regarding the brand. And I think that the sudden collapse of their fee model caught them by surprise in a way, and their initial reaction was to restructure their operation, especially the operation at the corporate level, in order to reduce their fixed cost. And eventually some of these savings will trickle down and have trickled down to the hotel P&Ls, and possibly some of these savings are there to stay for goods. And it's also true that the brand have understood that for many owning group, this crisis has become a business survival crisis. And to support them, they were actually allowing the suspension of some of their brand standards, right? And in some of the occasion, also they allowed the owner to get a bit more control on the operation as well, above the boundaries that usually the management agreement call for, right? And I think that will be very interesting when we transition then to the new normal, because I expect some sort of tug of war between the owner who want to retain the extra decision power that they've managed to achieve during these days, and the brand who want to come back to the old status quo. So I'm not sure what will happen. I think there will be interesting discussion, and perhaps in the future we are going to look back at this moment in time and see that it was been a pivotal moment in the relationship between owner and brands.
Remy, you're
on mute, Remy.
You're on mute, Remy.
Thank you. Sorry. Thank you, Vincenzo. Very interesting point. I mean, you were talking about the risk assessment that is getting more and more important for owners, and you were introducing the cost of efficiency and the importance of. It was quite interesting because you were talking about the importance of planning, but as well you were saying that we have to react fastly. We have, I mean, hotel have to be really agile to react to the condition. And we will come back to your point on brand versus owner. But I do remember during our preparation, Luc was willing to bring some example of future issue between owners and operator.
Oh yes, thank you, Remy. So I think first of all, I hope that it will not get so far that we can talk about issues, right? I think, and it's what Vincenzo mentioned before as well. It's keeping a dialogue with your operator and making sure that I think it's clear for everyone that normally, of course, we should all be working towards the same goal, and we're all in this together. And it became even clearer during the pandemic, right? So that's why if we think about issues or discussion points which might come up in the future, and one of it is definitely the ask of the owners to of the operators, for a minimum base fee, which of course there's us as an owner, we can definitely think about that, we can talk about that, but we also have to understand as an operator that the owners are taking the biggest risk, and that they are really mostly suffering the most as well financially during these type of crises. But nobody I think that's why it's very important, of course, to try to maintain this strong relationship here, and also with regards to costs. I mean, there will be issues. I hope it's not going to come to a war, like Vincenzo said, but I think it's there will be strong discussions about these costs coming back. I think we all want to come back to normal as soon as possible and talk about other stuff than cost cutting, and talking about how can we gain market share, how can we improve our guest experience in order to gain market share, in order to bring the product and in the end the profitability forward, right? So that's a given. But I think we'll definitely be looking in what type of costs are going to come back in. Do we really need I think I mentioned this, the famous one of our hotels, we saw a webcam that we were paying for webcam services on the roof when nobody really used that, right? So what is the added value for a lot of these costs, which and as long as it doesn't really, when it doesn't really add value for the guest or for the hotel, I think we should just make sure we keep those costs away from us, right? And then the next thing is about ESG. Obviously, ESG is a big topic. There is a conversation going on between owners and operators. I think that's how it should be, but I do also think that there is still a lot of communication going on from the operators, more than real action, so to say. And I think the sense of urgency is more with the owners than with the operators, and I think these are going to be very important topics going forward.
Remy, you're on mute again.
Yes, sorry, I tried to unmute to avoid the noise around. Thank you. Thank you, Luc, for sharing your experience. So your point on cost cutting and expecting to be back to normal, but keeping some habits from COVID period. that was quite interesting. But what surprised me, in fact, because at least both of you were talking of war, in brackets, I would put it, between, the owner and the operator and the brand. And I want to ask this question to Simon, because he got this huge feedback from all the owner and the brands. And our owner are going to push luxury brand to accept franchise contract, or to have, as Luc was saying, all the base fee completely reviewed, and give more freedom to managing hotels by owners.
I think certainly there's a change in the air. When I set up Hoftel 16 years ago, off the back of being CFO of a $500 million hotel investment company, where all the hotels were management agreements, it was really designed as a forum for owners who had management agreements. Now we have more than 70 members. Over half of them have some sort of hybrid ownership structure, where some of the hotels have HMAs, some of them have franchises, some of them have franchises with white label, and some of them they have their own brand and operation. And that seems to be spreading more and more and more. So you're seeing owners all the time, and the pandemic has really pushed it ahead, reviewing whether they want the operator with all the very heavy burden of recharges, with often very heavy operating structures, and sometimes with a lack of flexibility to stay in the hotel, or whether they want to look at something different. I think more and more across the world, the brands are not resisting the move to franchise. They know that there are white label operators who are capable of running hotels pretty well, sometimes better than they are, and they know quite a few owners are able to do that as well. So, we know, I mean, it's been around for a while, but for example, as a franchise, Conrad in London, the most high-end franchise I'm aware of is actually one of our members, which I'm sure you know, Remy, is the Mance family, who own the Ritz-Carlton Geneva, but also have been operating hotels in Latin America for some time. They have a franchise, a white label franchise operation in North Island in the Seychelles, which must be one of the highest end resorts anywhere in the world. And I think the reason for that is twofold. Firstly, it's luxury collection, I think. So firstly, Marriott understood that they knew what they were doing over years of working together, a very, very good renovation of the Ritz-Carlton, etc. But also, it was really too small for Marriott. 11 units, however high the rate, is never going to generate the level of fees that the big brands need. So I think where it makes sense for both parties, even in the luxury space, you are going to see the beginnings of franchise arrangements. And I think that's coming down the track more and more.
What do you think, Vincenzo, Luc, and Julian, as you are representing owners?
I fully agree with what Simon says, and I think that everyone recognized the value of the brand and the fact to having to participating in their biggest engine and their loyalty membership base, and just really put your hotel on the map, especially with the specific segments and geography, let's say, of customer that often brings something that your local demand cannot, especially in good times when they will be very able to bring volume and also rate that to your hotel that wouldn't be possible in other time. But as Simon said as well, the owner, I think, are experiencing, as I mentioned, during these 2 years, the positive side of having more control on their assets, let's say, and I think that they would like to have it a bit more in the future. And of course, moving to franchise or even to operate their own hotel will bring this sort of a communal of intent between the operation and the owner objective. So I think that this is something that we are going to see more and more often in the future.
Thank you. So thank you for this feedback, Simon, on the evolution of franchise, the rise of the white label management company, be able to manage luxury or ultra luxury hotel, and Vincenzo even saying that owner operators are a new business model growing within the investment world, with some brands or without some brands apparently. Vincenzo, you were early on talking about, no, that was Luc, sorry, who was early on talking about ESG and CSR, which is when we read the literature on, investment funds, this topic is getting more and more important, and they are, trying to even standardize reports. And I want to ask you a question, Vincenzo, is how do you measure CSR and ESG action, and that are more and more important to a tail gas investor, and how you are going to avoid greenwashing, because this is a hot topic today,
Sure. No, thanks, Amy. I fully agree that in my experience, investor, customers, but also employees are looking with increasing attention to the company ESG practice, and before they deciding to which buy from or to invest in or to work with. So it's a very relevant topic, and I think that simply the use of greenwashing could be perhaps a simpler option, but it's a dangerous approach, because just putting up a green marketing facade can only take you up that far in the conversation. And if you were pointed out, the other party will blacklist you and you will pay the consequence in the future, really. Instead, I think that a serious ESG strategy should incorporate every aspect of what really a company does, right? And actually, it's the strategy that should dictate how things are done in the company. So for this reason, I think that if the company wants to become a front runner in the ESG, it has to become a regular topic of the board of director agenda. So it's something that has to really trickle down into the operation and be embedded in all core decision of the hotel and supported by all relevant stakeholders. So I think the starting point should be to really understand what aspect of the business really materially affect your ESG performance. And so once you know which are those topics that you have to prioritize, it's important to assess what's the current status, what's the baseline of your company, and start building from there. Because as once you have the baseline, you have to set up some big aspirational objective, something that you have to drive your organization forward as a sort of a guideline, but of course also a set of a more manageable, smaller, achievable objective in the shorter term. So, but you mentioned that it's difficult to quantify as well your action. So you have your objective, but how you measure if you are getting into the right direction, especially if you're missing a sort of a benchmark or some consistent standard and measure. It's different to measure RevPAR of market share with a versus ESG. So that's why I think it's important. I think it's very useful to resort to similar strategies, similar companies as well, and partnering your company with independent organizations that are able to provide you with internationally recognized benchmark. Make it easier, let's say, to understand to the entire company what success would look like according to ESG. Basically. So the way it works is basically you provide asset data level to this company, and they provide you in return with comparable performance against peers in the same industry as yourself, basically. So you can track really against a consistent measurement and consistent benchmark, or you evolve, or your performance evolve towards times, and you can drive the improvement on your company. And also, in addition, this independent company expert will also suggest way to improve your performance and to become more sustainable, I would say, and also how to better communicate, this is very important, your action towards all the stakeholders. One of the methods that you could do to communicate to the external all your commitment to ESG is to apply for green certification, of course, and working with this organization will help you greatly, I think, because recent market studies have proved that achieving this kind of seals of approval, let's call it, from globally recognized independent bodies is really powerful to prove that your ESG commitment is really genuine, is impactful, and ultimately can have a very big impact towards customers, employees, but even more often investors.
There we go again.
Sorry, yeah, my fault always. Thank you, Vincenzo. Quite interesting, because you were mentioning, companies that allow you to benchmark your ESG and CSR performance, and as well, all the green certification, and who are looking at the all those certification. Even so, today, I mean, the question is which certification should you choose, because there's so many certification, and there are maybe certifications that are more known by customer, some others more known by investors. And on this ground, certification and ESG measure for investor, Simon, do you see any impact on yield and cap rate due to ESG matters?
For sure, yes. And in fact, one of our partners, JLL, is pushing this in more or less every presentation they're making. And when you think about it, it's simply supply and demand. If no institutional investor or no fund backed by institutional investors, so you're looking then at all the opportunity funds, the Blackstones, the Fortress, the Cerberuses, and so on, if none of them can buy your hotel because it's been brown listed or blacklisted or whatever that term is going to evolve into, your auction is probably trashed. I mean, potentially half your bidder universe isn't there. And so, this isn't about 10 basis points saving on a green financing. This is potentially about your yield moving out 1 or 2% when you come to sell the asset. So I think owners are going to have to invest significantly in whatever CapEx is required, as well as in benchmarking AI technology to get this right. I go back to what Julian was saying at the beginning. We've got supply chain issues pushing up supply prices. You've got labor costs rising in some cases really dramatically. I think we heard at a meeting recently, Julian, that housekeeping and F&B starting salaries are up 28%. You've now also got rising interest rates. You've got rising energy costs. And on top of that, you're now potentially going to have to spend quite a lot of money over the next maybe only 5 years to get your hotel to be ESG compliant. So there are a lot of issues facing investors, and they're all out of their hands. I mean, that's the interesting thing for me. Interest rates, energy prices, ESG compliance, nothing you can do about that. You've just got to deal with it. So yes, owners are going to be investing, I think, quite heavily in this in the coming few years.
Thank you. So
I think so too. I think, and I also agree, with what Remy said about the, the labels, and I think that's maybe one of the issues, with the hotel industry. If you compare the hotel as an asset class to other asset classes like offices, there the green certificates, it's pretty straightforward, right? I mean, there's 1 or 2 which are recognized, and the others, nobody even talks about them, right? So but what the hotel industry was able to do quite well is to communicate about what they're doing, right? So but in the end, I think that's where the opportunity lies as well, in order to streamline this certification and to make it more understandable for our guests, right? But that's going to come as well, because if you have more and more companies giving carbon budgets to their employees instead of travel expense budgets, there is going to be a shift there, right? So
and it might as well impact our industry in terms of the MI segment and business segment, certainly, and this would have certainly an impact. It was quite interesting, Simon. You were saying those hotels which were, had bad reputation on ESG or CSR, and you were saying that the yield were decreasing. So it's created a full opportunity for investors to buy those hotels, reconfigure them, invest a lot of money, as you were saying, to transform them into more sellable assets, which are up to the ESG CSR standards. On the same track, when you talk to different investors, and so they all say they all expect about talking about distress asset. And do you think any distress assets are going to come? And do you see any change in the ownership structure for luxury segments?
Or anyone?
You're asking me? Okay.
I'm asking Simon,
Okay.
but Julian,
I
can answer. I mean,
let me
you are there to invest.
Yeah. So from a real estate perspective, I guess luxury hotels are probably the most inflexible in this asset class, given that they're typically iconic buildings in AAA plus addresses. likely to be constrained by strict planning code restrictions, etc. Also, the high level of service requirement intrinsically make the operating cost structure in luxury hotels less flexible than other classes of hotel assets. So all of these things combined, I think, make it a bit more rigid for the more mainstream investor. So unless a property is grossly mismanaged or there is a redevelopment play or underutilization in the real estate, it is unlikely that the more mainstream investor would be keen to invest in this sector. In my view, I see luxury will continue to stay in the hands of institutional sovereign wealth funds, family, high net worth individual type investors. And because they have the means to see through the cyclical nature of the business and also to wait for longer term capital growth. What is increasingly happening, I see, and it's pretty much the norm now, is that such investors are becoming more sophisticated. They are educating themselves better about the business or taking on expertise to drive better performance from the asset, and joining Simon for a bit more advice.
I think, Julian, what I would say, what's been very interesting in the pandemic is the real dichotomy between how luxury city hotels have performed and luxury resorts. And luxury resorts, either in isolated destinations like the Maldives or far more in drive-to destinations, whether that's the Côte d'Azur or the Peak District or Ras Al Khaimah or Florida. Domestic destinations that you can reach even in a pandemic have done incredibly well. Florida ahead of pre-pandemic, Ras Al Khaimah ahead of pre-pandemic. Some of the Maldives resorts now ahead of pre-pandemic. So one of the interesting things will be whether luxury resorts become more institutional. You've had a little bit, say, in the Maldives, where you've had, CDL REIT or Blackstone buying resorts. Will that spread? I'm not sure, but I think it probably should, because, I remember in our Six Senses days, we were frustrated. A lot of institutions would say, oh, your resorts are too risky, that there's no fundamental underlying demand. Well, actually, in this crisis, it's been the other way around. City center business hotels have got slaughtered. And they're actually the worst performers, and city and luxury resorts have been the best performers. So maybe there will be a little bit of a shift there.
Yeah. But I think there will be some normalization beyond this initial spike. I think there's that pent up demand that's driving that demand for luxury. I think at the moment, it might get stabilized. Maybe so down the road, but we'll see if it's enough to drive change in the type of investor.
Well, that will be even better to resell those assets.
Oh yeah.
Higher demand it will bring you higher supply for those rare assets. Luc, we saw during COVID period that a lot of covenants from lenders were not met, and there was a lot of negotiation between lenders and owners. And what's your feedback about banks? Are they going to continue to loan you your money to invest in hotel? Because we see a higher appetite on the from the investor, but does the lenders have the same appetite?
Well, I think there has been a fantastic effort as well, of course, from the lenders to make sure we all go through this together, right? And in the end, they don't want to end up with all these hotels on their books either. So it's normal that that they are flexible and that they continue to be flexible. And I think that's of course that's the first reason why we haven't seen any real distressed assets, or very little. I saw a portfolio the other day from a bank with distressed assets. Well, they were already in trouble before COVID, right? Actually, so the COVID really, finished the job, so to say. So, but because of wrong location, wrong management, anything, So, and that's why I think that will probably continue like that. I mean, of course, our concern as an investor is obviously the fact that there is a lot of competition out there for with value add money, so with the value add capital for relatively little, supply coming in. So there's not a lot of hotels on the market, but there's a whole lot of capital. So that's why prices are still very high, and we as Tristan Capital, we have two types of funds. We have the value add fund and the core plus fund. And what I see is that we thought we would be extremely busy with the value add fund, but actually we're not because of the pricing, and we are looking at deals more and more with our core plus bucket. So I think that's interesting.
Thank you, Luc. Any other? We have 2 minutes left. Any comments you want to bring to our listener on everything you said, each one of you? Okay, so thank you, Julian, thank you, Vincenzo, thank you, Simon, thank you, Luc. I mean, that was very interesting, a lot of insights for the industry and for our listener. And I wish you a good day and good investment, naturally.
Thank you, Remy.
Thank you.
Thank you.
It was a pleasure.
All right.